Okay, so this is the trade replay for 18th December. Um, we are making the modifications in the code as we progress. So some of it is designing the flight as we fly it, but we'll see some of those changes as we come along. So one thing to talk about right at the beginning is that I have added additional lines of code that tries and identified some of these sweeps whenever they happen at a day high, day low level. So, as an example, if I look at the previous day price action, this was a sweep that happened where the price moved up above the established high and then gave a reversal signal. So what I'm observing is that some of these are slightly higher quality. So we'll continue to experiment. So that we'll do. The other modification that is more pertinent that I have done is that in cases where the market has a significant gap up or gap down, the previous drive, if it has happened, actually holds no meaning because then it starts giving very weird signal. So what I had done was that I had uh, created some refinement to the code to ignore the drive if the opening price is printed beyond the range of the previous day. Now, why that is important is that because yesterday the price actually got printed bang in the middle of the range, and ideally we should not ignore the previous price pattern. But because of the code that I had written and the way that I had selected the options, which is this, where I had selected this restart count at the open, while this sweep was printed, I did not get a signal, so I continued to wait. And if I had, then this would have been a signal to be taken because there is a drive, there is a sweep, and we have decided to take the weak signal if it is printed with a sweep, and at the same time there is a close above 50% of the prior bearish candle. So those are the uh, filters to the signal that we have decided to test with. Uh, but again, yesterday, because it was unselected and I was waiting for a system trade, this did not get printed. So again, I did not take this trade. So the market moved higher, and obviously I missed this whole move. Now at this point in time, so this was actually a quite a strong, clean move, but as it happens, we did not take it and we completely missed it. Now, at this point in time, the second signal gets printed for a reversal. Now, this has all the characteristics of a strong signal where we have a bearish bar, we have a good close, we have a sweep. All of the signals are there. So we wanted to take a low below this, a short below this for a potential target here. We'll also add the the anchored VWAP. So the other view was that if it comes, probably there could be a initial target that can be taken at this level. So the market moved, came down a bit, but continued to move up. Now at this point in time, well, in ideal condition, this trade could have been triggered, but I was saved um, from this one because of a decision that I had taken to keep the execution window below a certain level of pip. So what I'm also trying to assess, if I look at the data window, that will be more clear. In this whole sequence of bullish bar, I am trying to see what is the lower wick that is averaging to be created, right? Now this is important because in all of these drive candles, the price is on an average. For example, moving if I look at this one, moving at around $1.8 below the open price. So our idea is that it should, if it has to reverse, then probably it will take the average and then it'll reverse. So I think at this point in time, I was waiting for about $1.50 of price buffer rather than taking it exactly at one or two tick below. So I this was my trade placement, and as expected, so the market kind of came in and had a quick grab, and then went ahead, and I did not take this particular trade because of the buffer condition. And the market continued to move really high. Yeah, just complete clean trend I missed because of the execution error. Yeah, now at this point in time, another signal got created with a sweep, and if I see this, then this is closing below the 50% level, even though it's a weak signal. So this is again something that we will try and take. Now if I look at this candle at this point, the lower wick, average lower wick in the bullish pattern is about 97 cents. So what I did was I took it here, and then I added a buffer of $1 rounded, and then from this point, and then placed my short entry. So the short entry got triggered, and then it started coming down very rapidly, and I covered at the VWAP level, even though it came to the target, because our previous hypothesis that VWAPs or anchored VWAP rather from relevant lows and highs do create short-term reversal is actually coming quite true, and I'll continue to experiment whether to take the profits at the anchored VWAP level versus the actual target. Even in this case, the target got filled. It continued to move lower. There was a reaction, and then, like we anticipated, so this was a very steep reaction from the anchored VWAP from the lower level. This signal, while this is a strong signal, we are currently, the way that we are trading, we are not taking this. Just to remind ourselves, we are only taking reversals from established highs and lows, and we are also taking continuation above the highs and lows. So it continued. So yeah, on that point, just it reminds me. So this was when this failed and there was this close. So the failure was confirmed, and the way that we are currently decided to trade is that there has to be a signal that gets printed like this, even if it's a weak signal. Now, none of that happened and the market continued to move up. So obviously I could not take any trade. Maybe there is some refinement that I need to do to have some flexibility on the continuation, because this probably could be considered as a small pullback, but none of that happened yesterday. I completely missed this move. Now the market continues to move up, and then creates another signal. At this point in time, there is nothing to be taken, except for the fact that if I look at the last high where there was a close above, which is this high. So this is the mitigated high as of now. Yeah, and this is the unmitigated high at this point in time. So just to because this is a new concept that I am trying to test out, so let me just explain. So this is in a bullish drive, this is the highest high beyond which there is a close, right? So this is the highest high after which a bullish bar has shown a close. So this high has been taken and we'll call this a mitigated high. An unmitigated high is a high of the bullish bar after which there has been no close, right? So most all the candles have failed after this point. Now, what I'm observing is that while this is the best reversal level that is there, because if there is a failure above this one, then it kind of is a double top, it confirms. But when the market typically is coming to make that double top, and if the selling pressure is too high, then the failure also happens at times around the mitigated high, right? But any which ways, all of this was is hindsight. We decided not to take this trade because this was not a strong signal. So again, it goes, and now the second signal gets printed, which is a strong signal. So this is at this point in time. Let's just observe what all is true. So we have a strong signal. It has obviously closed beyond the 50% level of the last bullish bar. And in ideal condition, while we should be looking at reversal or a liquidity grab above this level, it did not happen and then it reversed. So my thinking was that okay, probably when the market needs to make a double top, it may not have the fuel to go above this unmitigated high, and maybe there is a reversal. So then at this point in time, I placed a sell order below this level. um, Now at this point in time, I this is where the issue started happening, because when this candle got printed, which went above the anchored VWAP from the high, and when this bullish bar got printed, and it still hadn't come to the potential target level, this is where I started panicking a lot, uh, second guessing that whether we should have avoided this trade because this did not go above unmitigated high, and was it like a trade taken in haste. So from here on, I just ended up making a lot of execution errors of buying and selling and just reversing my orders, right? So when I had sold and it popped up above this VWAP, I ended up selling or covering rather. Then it went back in. Then I again shorted it. Then it went back up in. Then I again covered. So I think I took about 2 3 trades and ended up, while not making any point and a whole, actually losing a lot between this choppiness. So that was just a very poor trade behavior. If I had just stuck, even if we had assumed that because this is strong signal with a sweep above the mitigated high, and the good thing is that this still remains as the mitigated high, because while this high comes in, there is no close above it, right? So therefore this actually high is holding up. And if we had done the simplest of trade, that short below this and have a stop loss where it dictates the stop loss, then actually we would have been fine. But uh, to no avail. There was a lot of panic, like the some of these strong candles when they got printed, and I was taking like a huge trade and so on. At this point in time, I had taken a long. I remember distinctly that when this candle had been printed with a reversal, I was thinking that, oh, probably there is a support from anchored VWAP that it has taken, so let us be long. So at this point in time, after making couple of losses which were weighing down on my psychology a lot, I had been on long entry. But the only, I would say, good thing in hindsight that I did, like it was the right thing to do, but ideally I should not have been in that position, was that because it was already 2:30 and at 3 o'clock the Fed's commentary was expected. So what I did was I placed one order to buy here, assuming that if, let's say, the commentary is favorable and the market appears favorable, then there should be a swift movement. So I placed another order. While at this point in time I was in loss, I placed another order, and then I also placed another order somewhere here of a double short. So this was the only wise slash lucky thing that I did, because we'll see what happened next in the market. And my view was that if there is a sharp movement on the upside, then I will get double long. That will help me sail over some of the money that I have lost in this choppiness. And if there is a sharp movement downwards, then obviously my this long will close, and then I will get into short, and then probably will enter in some profit. At this point in time, even though I had a good trade at this level, I was at an overall level loss in the day. Now, why that is important is because it was playing heavily on my mind that I have not taken the right signal, or even if I have taken the right signal, I've managed it pretty poorly, losing many points in this choppiness. So with all that, we went into this particular time. Yeah. So we went into this particular time, and the Fed commentary was expected at exactly 3 a.m. My time, and then this happened. Now, so this was, I just don't know. Like this was a lucky catch. Maybe the only read that I had correct was that there would be a strong movement, but I again was managing it pretty poorly, because at this point in time, what had happened was that when this candle got printed, I was in profit, and reasonable profit for the whole day. Okay. All my poor trade execution of here were kind of taken over by this one, and our previous trade was already in profit, so I was actually in good profit at this point in time, and I exited. My view was, I have seen it many times that when such a strong bearish candle has been printed, there is a swift reversal. And what this candle is not showing is that at some point in time there was this wick was came up till somewhere around here, right? And at that point of time, I was feeling that I might actually lose all the break even profits that I have made, and therefore I exited. Again, very poor trade behavior, but that's the nature of psychology. Funny part is that if I had just stuck with the original kind of trade, then it would have been just wonderful. But none of that was to happen. But then this continued to just go berserk. This, even if this candle was printed, it was soon kind of taken out. Now I try to see if I can take the long entry, but thankfully I applied the same logic, and I was looking at what's the in this bearish pattern, what is the above the top wick. So top wick was around $1.3. So what I decided that we will place our buy entry $1.50 above this, because that's how the top wicks have been kind of moving. Our entry did not get triggered. The market moved, um, and just continued to move down with large candle. This was a price movement that can typically, make a few months, but none of that was to be had, because we just could not hold on to our trade strategy. It just crashed after that. It now again printed a reversal signal. Now, um, okay, if I look at this one, uh, if I look at this drive as well, now the top drive is around $2.25, right? So in normal circumstances, we would have said, okay, let us place a buy order at $2.5 or thereabouts. But in real market situation, like, this is all fine if we are back testing and we have no consideration for the emotional ups and downs that happens. What is also happening at this point in time is that the stop loss is 38 points away if I just take a system trade. Now, generally, the trades, when they come, the stop loss is 5, 6, whatever number of points. But this truly was an unaffordable trade. Now, while I did not take it, and because I was probably more concerned about protecting the profit, because with the previous trade, actually I was in quite strong a profit, and I just did not want to give that away, which is again another part of psychology that we need to work through. But even if I was trading with very clear rules, this 38 point stop loss is something that I don't think the trade can absorb, given that, like, an average profit from a scalp perspective is about $4 to $5. So it's almost like it'll take about, if this goes into loss, it will take about 10 trades to do this. So either the choice was to have significantly reduced size, or to not take trade, which is something that we will have to develop as we codify our risk management, which probably we'll talk about in a future video. Um, so this would have been triggered, and then it would have been a huge loss. So yeah, I mean, we'll have to figure out to bake in some of these stop losses, or the extent of stop losses, in the way that we define a strong or a weak signal, because however strong a signal it may be, but if it has the potential to take away the last 10, 12 trades, then it's of no use. So the market continued, and then closed with a signal bar, and so on. So um, it's strangely one of those days which was very profitable, considering how much the system gives on an average, but was fraught with huge execution errors. So missing this one, because was of cannot be explained. It was pretty bad, because it was just error in the way that the indicator was applied, which should not have happened. This was an okay trade. This trade was managed so poorly. I mean, this whole period, just I was buying up and reversing, buying up and reversing, and just trying to gauge the market direction. In whenever we backtest, this whole period would have come without a glitch, because we would have said, okay, let's place a stop loss here, target entry here, target here, and let's just wait. But yeah, the propensity to trying and protecting the profit made through the day and not end the day in loss just wreaked havoc. Again, something that needs working. Saved by this sharp move, but again, yeah, it could have been a trade that just would have made the month, but hindsight is 2020. So yeah, we'll continue to uh, work on the setup and work on the psychology. From a setup perspective, I think we need a few modifications still, and yeah, and we need to figure out how to hold the trade till we have a right target, or even from a trailing perspective. Okay, so that was about it. Thanks.